When looking to use rental properties as a source of passive income, you want to be clear on what differentiates a mixed-use property from a 100% rental property. In this video, we focus on mixed-use properties and some issues to watch out for if you're thinking of renting out this type of property. A property is considered as a mixed-use property when it's used for both personal and rental purposes. Vacation homes are a great example of mixed-use properties. A property qualifies as 100% rental only if it isn't used at all by the owner for personal use during the course of the entire tax year. Mixed-use properties don't qualify for the $25,000 special loss allowance afforded to 100% rental properties. Instead, net rental losses are carried forward to offset future passive income. It's critical that you be a great note taker if you're using your property as a mixed-use property. As the owner, it's your responsibility to keep careful track of which days you're using that property for personal use and which days you're renting it out. A calendar dedicated to this express purpose is helpful. If you personally use what you're declaring as a mixed-use property for the greater of more than 14 days or 10% of rental days during the tax year, and you've rented the property out for less than 15 days, your mixed-use property may be disqualified as a rental property and will instead be treated as a personal residence. In this case, none of the rental income or expenses should be reported for the rental period on your tax return. Keep in mind that days in which you allow family or friends to use your property either for free or at a deeply discounted rate count as personal use days. Here's an example. An owner recently rented out his primary residence for a few days to be used in a movie. As he rented the house to the film crew for less than 15 days and used it personally for more than 14 days, the rental income is not reportable and neither are any expenses associated with the time it was being rented. If personal use remains under these limits and the property was indeed rented or held out for rent, then it can be treated as a mixed-use property. The expenses are then prorated between personal and rental use, and the rental income should be reported in full. If you have questions about mixed-use rental properties and taxation, please contact your Untracked Early advisor. I'm Kelita Sookhoo with Untracked Early.